Alistair, there's different ways of answering this question, and probably I've asked this question to different speakers, but here we go. Alistair, there have been many news articles, lots of them, about the performance of the US S&P 500 and comparing it to the gold price. But in the last 20 years, the price of gold has outpaced the S&P. The majority of investors aren't told this. Can you explain why?
I think essentially there are two reasons for this. The first is that physical metals are not regulated investments. Regulation of investments concentrate on bonds and equities almost entirely. When it comes to derivatives, you really have to be a professional. In other words, you escape regulation when it comes to dealing in your own positions. But gold and silver are not regulated investments. And consequently, the whole of the investment industry doesn't make money out of it. So they don't promote it. And this really means that as far as investors are concerned, this is a neglected corner of asset allocation. And because it's something which, you as an investment professional, you can't really recommend to your clients. You can't make money out of it. So, you're far better persuading them to buy NVIDIA and all the rest of it, and they make loads of money, and they come back and buy more of this and more of that. And, you get the churn, you get everything. And so that's the basic reason. But there is a further reason, and that is that really particularly since the 1970s, when Bretton Woods was suspended in 1971, the whole of the investment industry has been angled away from gold. It's just bought into the propaganda from the US Treasury and the Fed, and all the other central banks who have lined themselves up behind the dollar. So it's hardly surprising in a way that it's a neglected sector. But where it's led us is that the mining sector has also been ignored. And there's very little marketability in the mining sector. I mean, there are loads and loads and loads of exploration companies and all the rest of it, but there's very little liquidity there. The result is that, mines have actually performed extremely well over the last, year or so. But nobody's really bought them yet. I mean, the brokers don't have any research effort in there. And I think they'll be scrambling to try and correct that. Because obviously, as you point out, not only has gold actually outperformed the S&P, mind you, it depends, what time period you take, but broadly what you say is true. But the mines, which are more volatile, have definitely outperformed other components of the S&P big time, and particularly in the last year. And everybody's wrong-footed, and they don't talk about it. So this is something which is going to be interesting to see how it plays out. I would suspect that you'll get a late rush into the mining sector with people not really knowing what they're buying. And, the old definition of a mine, it's a hole in the ground surrounded by liars. In many cases, I'm afraid it's still true. You've got to know what you're doing. And very few brokers have the research capability to do it. It's going to be an interesting outcome, I think, this situation.
Yeah, I have to agree with that, Alistair, because I've just sold one of my shares because it was not performing. And it was only not performing because the people behind it made a error. I'm not going to go into details, but they made an error. So what I'm saying here, there's a third party involved. Yeah. And Darryl and I look at our gold and silver holdings. There's only one person involved. It really is Darryl and me. It doesn't move. Nobody else has any say in the matter. But you have a shareholding in another company, and in this case, a mining company. They make decisions that are not always right. So I congratulate you. You're spot on. Anyway, thank you very much, Alistair. Great talking with you again.